Welcome everyone. I'm pleased to present the next speakers for you. We have a fireside chat between Dennis Flad of Charter, Rika Eichner of the CVA, Christian Bieri of Stablecoin, and Pedro Lopez-Belmonte of Richemont.
How you wish. Ach so, okay, mit eins dazwischen. That's okay too.
Good, okay, so thank you and welcome to our fireside chat on the topic stablecoin and enterprise blockchain solutions. This is the perfect pairing. I'm very happy to welcome our guests today with us. Is on one side my co-chair, Rika. We are both from the Enterprise Blockchain Working Group of the CVA, and very glad to do this. Rika has a deep background, Accenture, and then now is as well independent consultant with blockchain experience. And she is actually a conductor of choirs in the past. And one of our guests is Pedro. Pedro is, I think, many years you've been the lead blockchain expert and lead blockchain manager at Richemont.
Yes.
I think 11 years you've been there. So
yeah, not all of them leading blockchain.
Yeah, 11 years there, and now has its own startup at the race, but you're probably going to talk a bit about it. And you, I know, actually, the fun fact is that when we were talking during Corona, you were always the one on the calls that was sitting in front of his chalet in the fresh air.
I quite enjoyed that.
Thank you so much. So happy to be here. Also, let me introduce our second speaker. And this is Christian Bieri, who is CEO of Swiss Stablecoin, so a super important company. If you have never heard about them, shame on you. No, of course, I'm very happy to have you here. And as we had the little alignment together as speakers, let's share some fun facts about each other. First of all, not only choirs, I was also conducting orchestras. And so we had some outside chalet balcony experience. But the interesting thing about Christian here is he will do a super challenge trail run tomorrow for 50+ kilometers in Lugano. So, wow, what a preparation. And also let me quickly introduce my wonderful co-chair, Dennis, who is an OG in blockchain and has the fantastic creative capability to do cartoons. So fantastic.
As well on blockchains, yeah.
Yes, exactly.
Good. So let's deep dive quickly on or deep in the different topics. And I was wondering, where are blockchains? I mean, when are they actually enterprise ready? And do you have real life examples for that?
Well, that's a good question. I think blockchain is a technology that it's in its purest form, public, decentralized. It takes a bit of thought and preparation to plug into enterprise use cases, of course, because enterprise likes predictability and control, right? I have in my hand two successful use cases. So at Richemont, we did a lot of exploration. We started 7 years ago, and fast forward today, the group is certifying all the intellectual property of all their brands in blockchain since 2020, since COVID actually. And it has 8 watchmaking brands with all their products in the blockchain, supported with NFTs supporting digital product passports. So if you go and buy a watch from whatever Richemont brand, it will have a digital passport with an NFT on a public blockchain. So I think this shows there are many other examples from other companies, but I would say the penetration is still not good, and I think it's because this requires a bit more thought into how to plug, how to blend the public decentralized approach with the private technologies, enterprise technologies, ERPs and so on, that the companies are using and want to keep because it lets them control and run their businesses, right? We are speaking today about stable coins, so I think Stablecoins is a good example of this kind of interface that might bring enterprises closer to crypto and to blockchain.
And in your view, Christian, what is the what makes blockchains enterprise ready?
Yeah, I think when we started out, we said we want to launch a stablecoin which is very wide used. So we must make sure that enterprises can use it. And I think, Pedro, you hit on a very important point there. I think for enterprises, it's not necessarily only the question, is the blockchain itself enterprise ready? It starts way before that. It starts with a business case. Is there an appealing business case? And part of the business case is then obviously to evaluate also whether the blockchain is enterprise ready and can be integrated easily. Most of the companies, apart probably from some of the banks, don't really want to touch the blockchain directly, so you need to build those interfaces that they can interact with it. But you also need, as Pedro mentioned, you need the interface that at the end of the day, the transaction they do lands in their financial systems, and they are not on the blockchain. So if you use your ERP system, you need to somehow have an interface that works seamlessly. All that needs to be there so that a company can use it easily. For us, an additional key point is also, we believe it has to be a regulated environment. I don't think companies will jump onto or using stablecoins which are not regulated. Obviously, stability and security, all that comes in, but the regulation is really key.
Yes, absolutely. I mean, we in the enterprise working group, we once really identified 5 key success factors. So one is the use case, as you say, and basically there are 3 kinds of use cases. Either it's something totally new, something that is totally expensive today, and you can easily, or it's a strategic point of view because you want to become independent from big techs, for example, with a decentralized infrastructure. Then the tokenization of assets as well, because in the enterprise world you have usually real life assets, goods, watches, and so on. And then comes this integration, as you said, that both of you said, this integration into the existing workflows. Because we're talking here enterprises. The enterprises have a daily business that runs on existing legacy and existing systems. You need to integrate with an SAP system, you need to integrate with an accounting system, you need to integrate with a payment system, etc. And I think that's as well what you said, Pedro. That's why we don't see that many enterprise cases yet, or we see enterprise cases, and I discussed it yesterday with somebody here at the conference. We see they start as a blockchain case, and then suddenly all the enterprises see, oh yeah, no, we can trust each other, that's no problem. And then they say, oh, but then let's go off-chain, That's an interesting thing.
Well, let me quickly add to that. Absolutely true points, but I think also where we, I think, should be really considerate. Yesterday, when we had also some other discussions with VCs, what was the common denominator there? What you both mentioned and what you already realized at Richemont, you need to have a business case, not just the technology you want to have, and not only you need to identify what business problem situations you want to solve, and then really think about, is this technology, this approach actually the right fit? Just don't use technology because it's new technology, right? Make it feasible, make it also in the sense of when we talk about volatility in crypto and something not predictable, and we're not following policy or regulation. That's of course with your Swiss stablecoin quite in the realm of super aligned with regulation and forward thinking. That's also a very important factor we shouldn't forget, right? Yeah.
So are then, stablecoins, I mean, it's usually used for transactions, and it's a transactional instrument and tool. But is that still the case, or are we already a step further? Or what is your opinion on that, Christian?
I think the transaction case is the obvious one, and is the next one we will hopefully crack and go in big scale. But we can already see beyond that, companies are building ecosystems on the blockchain, for example, for sourcing things, enterprise steering and so on and so forth. Another example is that if you think about shipping, worldwide shipping companies are putting documents on the blockchain, shipping documents, which then kind of build the backbone for the whole information flow. If you add on your stablecoin to that, you have a bigger system. So it becomes eventually an integral part of an infrastructure which goes beyond, I would say, way beyond just the pure transaction. Stablecoin obviously facilitates the transaction, but it will become part of something bigger, where there's also information, and in the case of Richemont, for example, IP or stuff like that is on there. And if you then add the fact that stablecoins can be programmed, as we all know, then you obviously open up a whole new world of possibilities you can do and improve your processes, efficiencies, automation.
Yeah, I think you said something interesting, which is focus on the use case and start from there. I think that's probably one of the reasons why many cases have failed and the technology has not penetrated really deep yet. As you said, a lot of blockchain cases a lot of use cases start by blockchain. Personally, I have a strong opinion about these blockchain consortiums, which they were really popular a few years ago. Almost none remains today, because also they were trying to build technology, which I find awkward. But essentially, I think one needs to identify what are the friction points and how whatever technology, it might not be a stablecoin, it might not be a blockchain, it's applicable to any technology. What's the technology doing for that use case? I believe at Richemont the technology is working already for 5 years. Is operational now. It's a bit mind-blowing say that a blockchain use case is operational in a big enterprise, but there it is, because we were looking into the friction points. You know, what do we do in order to make this work? What is this technology bringing? And then we looked into the technology. Okay, what are the risks of the technologies? A new technology. Are these partners going to be here in a number of years? And we build actually a technology layer that was solving of these problems. And I can tell you, we found not a long time ago that one of the blockchain public layers that we were using was being abandoned, and we migrated all the assets to another one. So all these elements that we analyzed and that we identified, we have been able to prove and to use the technologies afterwards. With the stable coins is exactly the same. You were saying before that companies don't like volatility, and in terms of finance, that's clear. And in terms of and I think that's probably the reason why crypto has not penetrated into corporations and in different industries, right? Stable coins definitely have the power to do so, because they are stable. You can treat them as another currency. And one of the pain points that companies have is the currency change, especially global companies. They need to choose when they do transactions. They need to move money around. Hello, stable coins to the rescue, if you will. I think that's a perfect use case. And I think it will we will prove right in short time, because regulation, it's clearly moving ahead to support also the adoption from corporations.
Quite interesting factors. Christian, share a little bit more about what, in your vision of Swiss stablecoin, is outside of the transactional area. What other things do you envision? What things are already happening now, if you can share already now?
Well, I think the outside the pure transactional world, we see a lot of the developments going on, but it is early days, I would say, to be fair. But an example I think we discussed before is the fact that you can combine information basically on-chain with transactions. But I think the other component in stablecoins we should not forget is also the store of value element of it. One of the examples we were discussing with a large online company in Switzerland is they purchase a lot of goods, obviously, from abroad, and their suppliers, they're actually quite happy to receive stable coins as a payment means, even if it's in Swiss franc and not in their original currency, or because it is in Swiss franc and not the original currency, because it gives them a stable store of value, which is for them more advantageous than having local high inflation currency, for example. So there's that impact we should not forget. There's obviously political layers which we have heard about a lot, what's happening in the US and why they're pushing stable coins. So we tend to think a lot about making a transaction cheaper, faster, quicker, but there's bigger kind of motivations around that can make the usage of a stable coin quite attractive in certain cases, which go beyond that simple fact.
Yeah, that's definitely a trend that we see as well, that a lot of large corporates are now starting really to expand their value chain as well in the finance area, so integrating the supply chain into their value generation. I mean, companies like Henkel, for example, or Bosch and so on, they start really to say, okay, you know, basically, instead, when you as a supplier, you need faster cash, you can actually get that. I can pay you within a day. With a reduction of the amount that I owe you. Because our usual payment period is in 60 days and so on. So these corporates are really starting actually to as well provide financial services to their suppliers. So they're building like their own ecosystem to their strategic partners. And that's actually where we really see stablecoins can become a crucial component in there. And as Pedro said before, I mean, when we look at the history, we heard as well in this conference a lot about, we can use stablecoins for cross-border payments and these things. And I mean, the cross-border payments case in blockchain, we're discussing since years.
Yes, yeah.
And I mean, that was as well one of the original use cases from Ripple, revolutionizing the cross-border payments. And it always struggled with getting the cash leg. Well, at the moment you came to go to corporates and ask them, okay, you need to buy XRPs for doing the cross-border payments. They said, oh. Why buying a separate currency when I have already Swiss francs, US dollars, and pounds? I have enough currencies to manage. I don't want to lock additional liquidity into a coin that is not liquid, that I cannot use for other business, for paying salaries, for paying suppliers, and so on. And I think that piece that was really holding enterprise blockchain solutions back, I think that is now going away. Don't you think so?
Yes, I think also we tend to have this kind of tunnel vision, and when we find something new, we get overexcited about that, and we don't really see all the work, the legwork that needs to be done for that. I think if we compare the state of the infrastructure now versus 6, 7 8-10 years ago. It has matured a lot, is more stable, is more performant. So I think corporates now can look at it from a different perspective, right? I think one also of the elements that is forgotten is the incentives for the adoption, right? So if you look at payments systems, you see that all these payment systems have been evolving along with. They have taken time to evolve. They have not been built in a day, right? But sometimes you can speed up with adoption. I'm fascinated particularly by the adoption of QR code payments in China, which probably most of you were around. But what fascinates me is how the Chinese government moved from a non-technological society, not even regular phones, the one with the wheel that some of us remember and have used, to QR code payments. And it was through incentives, right? They incentivized clients, providing discounts, and they incentivized service providers, providing discounts as well. So the government subsidized the adoption of the technologies, and they made it happen in 3, 4, 5 years. What puzzles me is that blockchain, one of the key pillars of blockchain is incentives. It's built on incentives, on finding the right incentives for all the actors. But then when we go to implement these solutions, we totally forget about these incentives. We forget that it needs to work for everyone. It needs to be a win-win for everyone. But I think that's part of the game. And I think also, I know that I'm, taking a kind of side road here, but I think it's important for enterprise adoption. We also forget the point of decentralization. I think decentralization brings a lot of efficiency, because when it's decentralized and it has been verified, whatever it is, you don't need to re-verify again. You can build automation on top of that, right? So when we see a lot of solutions. I'm going to mention the previous keynote, this Google solution. I'm not going to speak negatively about that, but I'm skeptical, because what I was reading between the lines is a centralized solution with, dressed as a decentralized, as blockchain. And I'm not blaming them. I think they are trying to build a solution positively and with good intention. But I think this has happened. We have a lot of examples in the last years of centralized solutions that have been built in the same way, try to solve problems that the centralized solutions are bringing, while we should have taken a different approach. Off-chain data is one of them. I think it's been used and abused extensively, to the point that companies finally say, okay, there is no difference between putting my information in a blockchain or what I've been doing for years and decades in a centralized database in my system, right? So we need to pay attention also to that, to bring the right value with the centralized technology. And going back to the topic, I think stablecoins are more and more mature and keeping that value. One last point that we were discussing before, I am very impressed by, putting example, USDC, USDT. They live in different blockchains. They have decoupled the infrastructure layer from the application layer. And I think that's super positive. It's one of the superpowers, because it gives a lot of flexibility using those stable coins.
That's fantastic focus, and let's zoom out even a little bit further and think about, if we talk about the infrastructure could change, business models can change. You also mentioned something about the why somebody should do that. Think about now when we zoom out for even outside financial aspects of an entity or the financial area. As you worked for Richemont, and as we hope all aware, there are current enterprise blockchain use cases. Let's pick one example which we might have as a neutral example. Think about diamond trades. De Beer has, with other diamond trading companies, the Tracer app, or a situation where you go away from a centralized solution. It's a fully decentralized, non-paper solution. You have a proof of the heritage, origin, on-chain, and you don't need to prove that again, not by paper, not by signature or something. So this is something we also think from also our working group Enterprise Blockchain, that these are use cases which at least entities can consider and research. And I'm sure that there is a lot more potential for new business model, new thinking of infrastructure, finding efficiency, implementing that, of course, with, for example, a stablecoin within the entity structure, within the business model. And I know, for example, Pedro, you are venturing out in a even further, in a different combination where you even combine several emerging technologies, not only blockchain. Would you like to elaborate a little bit on that, maybe?
Very quickly, yes. MetaMind is building immersive, the next generation of e-commerce through an immersive technology that blends spatial web with AI and also with blockchain. And if you think about how you interact with e-commerce, there is no differentiation. The experience is mostly the same. Doesn't matter if you go to a luxury brand, to Amazon, you have a portfolio of products, catalog, and you can buy whatever you want. You put it in your shopping cart, you purchase it. That's it. That's the experience. So we want to do the experience much more immersive and give retailers the opportunity to differentiate across themselves. And one of the things that we're implementing is a tokenization layer, both for payments and for real-world assets. So I'm not going to elaborate more on that because we don't have time.
Yes.
But in terms of payments, we plan to offer payments through fiat, of course, credit cards, whatever, but also through stable coins and some tokens.
Quite interesting. So maybe one question, nearly closing in on the time. Christian, do you think when we have this discussion, what kind of future, maybe architecture layer are we not seeing yet?
Well, I think for me, looking at it from a stablecoin perspective, the interesting question at the moment is how the whole orchestration globally for stablecoins will pan out. Will there be tons of different stablecoins which kind of don't work together? You have to go through an exchange to change from one to the other, or will there be something like a new visa for stablecoin that globally orchestrates the whole flow, independently of the blockchain, independently of the stablecoin you're using, making sure that everything is also regulated, all the regulations are compliant with, and so on and so forth. And there is a lot of competition at the moment, obviously, in that field. How that pans out, how the end game will look like, I'm not 100% sure yet. But for stablecoins to really get the traction and become a global payment, an important global payment, means there needs to be some sort of orchestration of the whole thing. Else it will be a fragmented, non-fluid, non-liquid market, which is not going to be interesting, particularly not for corporates. Might be okay for domestic cases, but it's for globals and for corporates, it's certainly not going to be the solution if it's too complicated.
Very good. So last question. If you would give one advice, one recommendation on enterprise blockchain and stablecoins to the audience, what would it be?
Well, I'm going to take my hat of expertise in non-financial institution, ditch the fees. Fees works very well in finance, and probably most of our audience are from this field. Manufacturers especially, economy of scale, more volume, cost reduction, so they want predictability, not volatility. Ditch the fees.
Get ready. It is coming. It's going to be a bit of a way still until it's fully there, but become ready and prepare yourself so that you can join the train. Okay, so thank you very much. On time, and we are very excited, and let's see where the journey will take us.
Thank you all.
Thank you very much.